A simple gap trading method that does wonders. Part 2. If you have not watched part 1, I recommend to traders to watch part 2 before watching part 2. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. For Fibonacci trading, our website is www.Dayprotraders.com. The title of the video is a simple gap trading method that does wonders, part 2. All right. In part 1, we were talking about a simple gap trading method applied to a stock that has gap up. Okay, so it was a bullish gap. So the stock gap up from A to B, and then we apply Fibonacci retracement level, and we highlight the 50% and the 51 and the 61.8% Fibonacci retracement level. All right. So this is about part 1. If you have not watched part 1, please do so. I'll put the link in the description section for the part 1, so check it out so you may understand what I'm talking about here. In part 2, we will apply the same strategy, but this time when a stock, a currency pair, or a commodity, or any financial instrument, gaps down. Okay, so the first part we were in a gap, the stock gap up. The second part is about stock gapping down. Okay, how do we apply the simple gap trading strategy? That does wonders. Okay, the strategy is very simple. Stock gap up or gap down. Okay, we highlight the beginning of the gap to the ending of the gap, and then we apply the Fibonacci retracement level, and we highlight the 50% and the 61.8% Fibonacci retracement level. Okay, so let's get started. Okay, so we can see that this stock here, Alumina Incorporation, this is an American stock listed on the NASDAQ 100 index. You can see that the stock did gap down. This is July 2015. You can see we are on the 2-hour chart. Okay, all right, on the 2-hour chart, and the stock gap down. So this is the closing price of this candle here. Am I talking about? So here the closing price, that's the beginning of the gap, and the following day the stock gap down. So we will place the second line at the opening price of the candlestick bar here. So here we place it at the closing price. Here we place the line at the opening price of the first candle right here. Okay, so this is it. So we highlight the beginning of the gap and the ending of the gap. Okay, all right. Now we will apply Fibonacci retracement from the top to the down. So from the beginning of the gap, we apply the Fibonacci retracement, not Fibonacci extension, Fibonacci retracement. By the way, if you want to know more about Fibonacci retracement, you need to go to www.Dayprotraders.com. All right. So we start drawing the Fibonacci retracement from the top, beginning of the gap, to the point where the gap has ended. So here is my Fibonacci retracement lines on my 2-hour charts. Next, we highlight the 50% Fibonacci retracement level. That's the first line here. And then we highlight also the 61.8% Fibonacci retracement level. Very often, not always. I need to repeat this again. Very often, but not always. Stock will gap down, like you see here on the 2-hour chart, talking about Alumina Incorporation. The stock will rally up into the zone of 50% and a 61.8% Fibonacci retracement levels, and we find a resistance there, and then continue to go down. It's a continuation, trading strategy. So stock gap down and rally into the zone of 50% and 61.8% Fibonacci retracement level is a bearish trade setup. Now, if we were on any time frame, like 1 minute, 5 minutes, up to 15-minute time frame, if a stock gap down like this from A to B and rally up to the zone of 50% and 61.8% Fibonacci retracement level, if we were on any time frame between 1 minute to 50-minute time frame, and the common set trend line of the rally is broken, we can sell straight away. Now, do not forget that I have said that if we were on any time frame between 1 to 15 minutes, all right, but here we are on a 2-hour chart. So if we were on a higher time frame, once the price gaps down, as you see, and rally into the zone of 50% and 61.8% Fibonacci retracement level, this is now a bearish trade setup. In order to trade that bearish trade setup, one must use what we call a top-down trading method. I will also put a link of the video about a top-down trading method. Okay? In the description section. So check it out. The video, the link is in the description section. Link about the video about the multiple time frame trading method. So we are on a 2-hour chart. So you see it gap down from here to here. And rally couldn't go even into the zone. Am I talking to myself? It touched only the 50% here. Not only that, now finally the common sector line here is broken. But because we're on a 2-hour chart, it rally into the zone like this. We can draw the common sector line like this. Now we can combine the 2-hour chart, okay, the 10-minute time frame, okay, and the 3-minute time frame, for instance, for the entry. So we can use 2-hour time frame as a trading setup, okay, 10-minute time frame for the signal, and maybe 3 minutes or 5 minutes for the entry. This is one example, just one example among thousands of different types of top-down trading methods. A top-down trading method or a multiple time frame trading method consists of using at least 2 time frames to analyze a financial instrument. Here, a stock gap down from here to here and rally into the zone of 50% Fibonacci retracement level is a bearish trade setup. One must use a top-down trading method. The reason why one should not sell straight away on any time frame that is higher than the 50-minute time frames, all right, is because is to control the risk. Instead of just selling and the price will continue to go up, is to control the risk. One is exposing oneself to higher risk on the higher time frame than on a 1-minute time frame. All right? It makes sense? So here you see gap down from here to here, and rally here. This is a trading setup. We can use the top-down trading method to trade it. Suppose you don't know anything about top-down trading method. So you see now, okay, it gap down from here to here, and it rally into the 50% Fibonacci retracement level. And you do not know anything about top-down trading method. Okay, be patient. So if it's going to go down, the price will be in a declining channel and will form lower lows and lower high. Here it is. After it retested here, what has happened, my friend? We are trading the price, not the indicator. So price, see, it rally up to retest the zone, the 50% Fibonacci retracement level, and then pull back and display a lower high. Now, you don't know anything about top-down trading method? All right. So if this trend line now, after retesting it now, you see, this price now, it touches the 50% Fibonacci retracement level, pull back, and then display a lower high. If this trend line here is kaput, now you can sell. And here you can see that the price just continues to go down. So if I draw another trend line like this, you see that this high, and then it touches for the third time here, below, okay, the beginning of, below the gap. So what has happened, you see, you rally to retest the 50% Fibonacci retracement level, pull back, try to go up, display, okay, the first lower high. Okay, so you didn't know how to enter. Okay, you missed that opportunity. Now you find it here is going down, okay? It's going down. You want to sell along this trend line here. Okay, you see here? Now you rally to return that red trend line and also the lower part, okay, of the gap here. All right? Use a top-down trading method because you're a 2-hour chart to enter the trade. You can combine 2-hour chart, 10-minute time frame, 3-minute time frame. If you're on a 4-hour chart, you can do 4-hour, 50-minute chart, 5-minute time frame. Different type of top-down trading method, okay? It makes sense? Very simple, all right? As always, you watch a video for the first time on YouTube, test it, retest it, okay? Use a demo account, practice until you are satisfied with it, and then go live. Do not watch a video on YouTube and start trading straight away with real money. All right? It makes sense? Very simple. Now, our trading approach is very, very conservative, and we don't want traders that are looking for a quick fix. All right, that's not what we would recommend you to trade. We want traders to be very defensive, very conservative. Use stop loss, control the risk. Use a top-down trading method to control the risk. Okay. Yet again, I want to remove this line here. So you see now, I want to show you again another example here about a simple gap trading method. That's what it. Yet again, we can see here we are on the 5th of October. The stock gap down again here where I placed the first line, the red line here. It gap down from here all the way here. So from the closing price. So there are two candles here. Oh, we can see there's a small. You see the black one here? Can you see? You see there's a small one here. So from the closing price, the bearish candle, so from the closing price to the opening price of this candle here. That's the first line there. That's the second line. Next, what do? We apply Fibonacci retracement to the gap from the top to the down, okay? Beginning of the gap to the ending point of the gap. Next, we highlight the 50% here where it is, this one here. And we also highlight, the 61.8% Fibonacci retracement level. So price gap down from here to here. We are now discussing the bearish example. In the first part, we were discussing the bullish example, okay? So we had the 50%, the 61.8%. Here it is, a rally to retest the 50% level here on the 2-hour chart, not any time frame between 1 to 50 meters. So we cannot sell straight away like this because why? The risk is high. It's up to you what you want to do. So we wait for the common centralized broker, use a top-down trading method, or as soon as it touches, apply a top-down trading method to trade it. Okay, you see here, it went down a little bit. Control the risk. So it's going down, okay, all right? Control the risk. How much profit do you want? How long do you want to remain in the trade? Check the higher time frame for other support level. I don't want this video to be too long. Let's move on. So here, it was great, okay? Price pull back a bit and change direction. Come back again, retest it here. This was a messy trade. Sometimes trade can be messy. And losing trade do happen. It doesn't matter which strategy you are using. You may see sometimes things like this. Price rally up and then blah, 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 blah. People end up losing money. And it's all about the time of the day and what is happening. Is it because of economy new? We have consolidation here. Why the price consolidates here? Is this a key level? Very often when the price is acknowledged because some people sold it here. As the price return back, they are selling, but the price blah, 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 and finally went back up. You can see that here. There was no clear cut, okay? That's why, here you can see now, why it's so important to use a top-down trading method. You see here, blah, 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 blah. It's just consolidating. Whipsaw. Whipsaw will happen when the price is consolidating. Blah, 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 blah. Didn't work this time. Yeah, didn't work, okay? There's no trading strategy or trading system that can deliver 100% winning rate. All right. The reason why, so forgive me, my friend. So the reason why I'm speaking like this is because I want you to get it, okay? So you don't go and waste your money or do something that is not right. That's why I'm stressing on it. I'm very serious about it. I'm not trying to patronize traders here, okay? So we are still friends, okay? All right? So finally, again, price went back now into the zone. So the zone between the 50%. So before it was touching, it just found resistance. And then finally, it went into the zone. Yes or no? You see between the two lines? It went to the zone. Now again, draw your trend line, just draw it. Along the price, what I meant by common set line, a trend line that is quite close to the price here, very close to the price. That's why I'm calling common set line. Okay, are you with me? If I can draw another common set line here, so you can see very close to the price like this. That's what we call common set line. See here, very close to the price. I can draw another common set line here, very close to the price. That's what we call common central line. So here again, you can see that after it gap down, rally here, pull back, now it did all this blah, blah, blah. Now it went into the zone between the 50% and the 61.8% Fibonacci retracement level, and the common central line is kaput. Use a top-down trading method, and here it is down. I think this is just error from the chart itself, this candle here. Okay, so it went down. All right, and it returned back again to the same zone, and traders are already selling. And here, once again, you see blah, 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 blah. Again here, consolidation, and then you just run away. This time, you see how, here, if you draw your common central line like this, you see, it went back into the zone, it stayed above the common central line. All right? Use the common central line and use the top-down trading method. This is the end of this video. about a simple gap trading method that does wonders, part 2. In part 2, we were showing traders another example where the price this time did gap down. In the first part, the stock did gap up. In this example, the stock gap down. The stock we are looking at is Alumina Incorporation, American stock listed on the Nasdaq 100, EPIC ILMN. Okay? All right? If you like this video, please give us the thumbs up. If you dislike it, please give us the thumb down. The strategy is very simple. Stock gap down from A to B. We draw the first line at the point where the gap has started, second line at the point where the gap has ended. We apply the Fibonacci retracement level to the gap, and we highlight the 50%, the 61.8% Fibonacci retracement level. Because it's a bearish progression, stock gap down, it's a bearish progression. If the price rally into the zone of 50%, 61.8% Fibonacci retracement level, the first challenge is this is a resistance zone. If the common sense trend line along the price is kaput, we apply top-down trading method. If we are on any time frame that is higher than the 50-minute time frame, we'll use a top-down trading method to control the risk. If we are on any time frame, like 1 minute, 5 minutes, 10 minutes, 50-minute chart, we can sell straight away if the common sense trend line is broken. Remember, there is no strategy that offers 100% winning rate. Trader must retest the strategy at each point of each time, all right? Use a demo account, practice until you master it before going live. Okay. All right. So if you like this video, give us the thumbs up. If you dislike it, we want to know whether you dislike it. Give us the thumbs down. All right. Very important for us. Doesn't matter whether it's up or down. Okay. If you love this video, please share it on Google Plus, on Twitter, and also on Facebook. All right. If you love our video, you say, I love this video, I love the video, I love this video, okay? Feel free to subscribe to our channel. Hit the subscribe button so you may stay tuned and watch other tutorials like this. If you have any question, put in the comment section. Any suggestion, put in the comment section, all right? You want us to record a video relating to gap trading and Fibonacci, put it in the comment section, and in due course, I will record another video to answer your specific question. We wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about a simple gap trading method that does wonders, part 2. I'll put the link of part 1 in the description section, and also a link about multiple time frame trading method in the description section. Thank you for watching, and I will speak to you very soon.